What's up everybody? Welcome back to my channel. If you're new here, I am Carolina, your San Diego realtor. And in this week's video, I wanted to talk about what exactly capital gains are and if you'll have to pay for them when selling your home. As always, please hit that cute little red subscribe button and like my video to let me know you would like more real estate related content. So to begin, I wanted to go over what exactly capital gains are and how they can affect you as a seller. The IRS uses capital gains to determine whether your home that is being sold is either a primary residence or an investment property. If your home was a primary residence, it could have an exclusion under two different names, whether it is the home sale gain exclusion or known as primary residence exclusion. With that being said, it also depends on how you are selling your home financially. If you are joint taxpayers or if you're a single taxpayer, joint taxpayers have an exclusion of up to $500,000 on the profits of a primary residence, and as a single taxpayer, you have an exclusion of up to $250,000 on your profit. To determine whether your home is a primary residence, you have to have it as an owner occupancy for a preceding 2 years out of 5 years. So let's say you've owned your home for 5 years and you've lived in it this year and this year, it is not considered a primary residence. These two, or these two, that's a primary residence. You also cannot request an exclusion if you previously sold an excluded property within the last 2 years. Capital gains are determined on two different categories, the cost basis and the net process. The cost basis is based off of the amount you paid on the home. That includes the purchase price, any sort of escrow fees, so that includes ordinance fees, title fees, what have you, the $7,000, $12,000 you may have paid in closing costs. And thirdly, any sort of renovations. So let's say you took down a wall, redid the whole kitchen and all the bathrooms. That is taken into consideration for the cost basis, as well as any new appliances you may have in the home, because those are again considered a upgrade and equity within the home. The net proceeds are based off of the net profit of the home, and it does not include any sort of realtor fees paid to the seller agent. The capital gains that are based off of the net proceeds also take into consideration your income and the length of ownership on the home. The IRS then categorizes the length of ownership into two different categories. It is short-term, which is a year or less of ownership, and long-term, which is a year or more of ownership. If the length of ownership that you had is considered a short-term ownership, then your net proceeds will be taxed in ordinary income taxes, depending on your tax bracket. As far as long-term ownership goes, it will go based off of either 0, 15, or 20%, depending on the overall taxable income. And with all of this information, I highly recommend you talk to your accountant or your tax preparer to find out what exactly and if you'll be paying for capital gains, because again, it takes into consideration the net profit of what you made on the sale of your home, as well as the length of ownership. If you've owned the home for 2 years or more, it is usually considered A-okay, you get to keep it all. If it's 2 years or less, which is typically looked at as an investment property, then you will likely be taxed. But again, it is 2 out of 5 years in a preceding order, so 2 years, 2 years, 2 years, or 2 years, 2 years or 2 years doesn't count. So again, please speak to your accountant or tax preparer and to find out if you will or will not be paying. I hope this video helped you understand capital gains a little bit better, and if you will or will not be paying for capital gains with the sale of your home. As always, please comment, like, and subscribe to let me know you want more real estate content. Thank you.